So welcome to another clean-cut hedging video by the Trading Mentor. My name's Will Sebastian. We're going to jump straight into it. Before we do, if you enjoy this, and you can see on every single hedging video I'm posting that we always end every market move, no matter the asset, no matter the time, in full gains overall with a low drawdown structure. Then like, comment, share, subscribe, and go underneath if you're interested in learning a little bit more for free. Let's jump into this one. Okay, so let's jump into another full net gains back test. We're going to end this back test, I promise you, in overall profits. We're going to keep low drawdown, and we're just going to trade the whole spectrum of the market. Mostly you'll notice in a lot of the analyses, videos, charts I post, oftentimes I'll be looking at much higher time frames. That's because I am a swing trader. I trade via prop as a swing trader mostly, and I run cash portfolios as well. But just to make this nice and interesting for everyone, I'll keep it on the daily. Now, obviously, to start with, we can keep a maximum size. Remember, you would have a broad portfolio of assets. It wouldn't just be one pair you were trading. So you can take the gains we make on this pair, and you can sort of add in what it would be if you had a full range of assets. So I'm going to start off, and you can just see how far, this is really key, you can see how far we've gone down. Okay, you can see it's almost 9%, 1,000 pips, however much it is. And then if you do this with a fib, you can see, well, you're about 25+% of the way, 30%, okay, almost a third of that retracement. So you've got to ask yourself, well, how often does the market only retrace that far? Now, typically on an FX market, you'll often see much larger retracements than this. Just zoom out and you can see that there. So I cannot afford, if I'm going to be hedging, I'm not using stops, I can't afford to do something like a 0.8. Okay, it's going to be too high if I'm going to be keeping drawdown low. The more I stretch the drawdown, the higher the profits are going to be, but the bigger those variance swings are going to become. So I'm just going to start with something smaller. Go for 0.25. I'm going to click this on a bit, and the higher we go, the more keen I'll be to add. So I'll be doing that with technical rules I've developed over many years. Okay, so I'm just going to add a little bit more. I'm not going to go quite as heavy as before, and we'll just click through a little bit. So we've got small gains there on that one, and on a much bigger pullback, I'll look for something more meaningful. At this point, I'll just take that $70 off, and I'm going to hedge very, very lightly. Okay, just precautionary, just in case we pop back up. And obviously, because I'm clicking forward, I'm not going to be able to, there are going to be some cases where I would have taken gains, but it won't matter overall. So I'll just take that one off for gains. And I'm actually now looking at what could be a continuous uptrend on that former retracement. So because I'm not shorting anymore, actually what I can do is I can have the same fib I had before, but now I can really ask myself, well, we're actually rather low down on this. And if we're going to see those high retracements, now is probably going to be a good time to buy. Coupled with that is the pullback to your key moving averages, which markets mostly rely on for overall movement. So now I can take something heavier like a 0.4. Would have been a bit more ideal nearer those MAs, but I'm happy just to let this ride. And anything back down the lows, I will just add another size like the 0.4 or something thereabouts after. So at this point, you can see I've got a long here. That's just out the money. I've now got $136 there. So I'm just going to hedge this long I've got, okay, at 100%. And now I'm actually going to remove, I am going to remove the long. It's only $20, but it gets it out of the way. And I'm going to hedge, I'm going to just place another short. Now I will let it play a little bit just to see where we end up. And if we get a pullback, I want to keep this flawless at no loss, okay? But we'll take $2.57. I'm sure nobody's going to mind. And I will just take a long because your MAs are catching up, okay? And now you've got a much more aggressive push. I can take that off. Probably should have taken it down here, but I didn't get the chance because we're back testing. But I will take another 0.25. I'll take that one off for gains there. And if we can keep going up or at least stall, I'm going to take that one off as well. So I'm now going to short again. And you can see I've got $89 there. I'll take another long. And now I'm happy to just keep the size fairly similar because it means, I don't have to think a lot. But they're all very valid light entries because the market is going sideways. You can see you're not really going above 107.4. You're not really going below sort of 105, 0.3, really. Now you're coming into this MA here. So I'm just going to tighten that slightly because I would like it slightly lower, but instead I'm just going to take a lower size long. And on any rebound, probably nearer here, just to complete this sideways trajectory, I'm going to look to take gains. Okay, now we probably will get in a position where we can hedge. And because I'm not using stop losses, I have to be very accurate. I'm going to take another long there. And I think I'll probably squeeze another long if we can get this low, because at that point, we've gone from 107 near a 104. Typically on the Ord New Zealand, you do get massive stretches sometimes, but that's what our risk management procedures are for. So I've taken another long there, and I'm going to play this forward. And I don't need to hedge or anything because I'm not at risk at all. And now we're looking at breaking this low. So as soon as we break this low, I'm going to have to ask myself, what is my unrealized P&L? Okay, what is my drawdown on these positions? And how much am I willing to risk? Now, because I've kept the sizes low, I can really afford for this to just plummet under this low and keep going down here. It's really not going to cause a massive issue. But I want to keep an eye on my overall equity, because I've always got in my mind how much I'm willing to be down at any time. So for that reason, I can just take a minor hedge there of 0.1, just in case we keep falling, which we did. It's only $40, okay, but take a lot of those over and over again, and it obviously adds up quite a lot. And I don't really want to long anything significant because the market now is just trawling down and down and down and down. Now, I haven't viewed this data. I don't think I was trading at that point because that was 9 years ago now, and I'm only 26. So I wasn't trading the Ord New Zealand when I was 17. I was sitting exams that I didn't want to do. But anyhow, when it looks like there's risk in the market and you've gone a significant way and you're just going down, 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 that your MAs are moving with you, there's no significant pullback. There's a good chance the sentiment at this point is incredibly weak. So we're still pulling down now. So I've got the choice. Do I want to add? And I will add, but I'm not going to do anything major because this level is not significant. It's not a really, really key level that screams to me, oh, I'd love to buy that. But nonetheless, I'll take $100 on there. And if we can just push up nearer this 20 MA, then I'm just going to take something really light as a short. Okay, so I'm going to sell that. And I'm going to take those gains, $60. So that's 100. It's 1/15 in hedge gains already. So I'll short that again. Okay, now we're really pushing up. So I'm just going to add another light short to hedge on that next MA. And you can see my long now here, I can take for $142. So if I really wanted to, I could actually just already get rid of that one with the gains on that long, which I am going to do. Okay, just because I want to tighten up early. Okay, and now you can see the push has gone 102 to 105. So it's gone about 300 pips. So I'm happy now to continue adding these shorts. Okay, so I've got $50 there. I can add another long. Okay, and in this case, it looks quite bullish, this market. So I'm going to add two very small longs. Okay, and now I'm going to take them off. $84. Okay, take that one as well. No, yeah, there we go. It's gone. So I've got a couple of shorts here still, but I'm not thrilled about the area we're at. So if we dip like that, I'm actually just going to take another 0.25, slightly more aggressive, but price looking quite bullish. I'm going to take off $82 there. I'm going to add 0.15. So all the time you can see I've got longs open and I've got shorts open. And if I want to, I can just take that long to hedge those former shorts I just put in. And I don't really like anything short until a bit higher. So I'm going to take that long off for gains. I'm going to take that long off for gains. And now we're looking at a key short level. So I'm going to put this to about 0.3. I probably would prefer it slightly higher near that higher MA. But whether you get there, okay, we're almost there. I'll take that short. And then I'm happy just to see what happens now, really. If we keep rallying, I can look for new shorts a bit higher up. So this one's a bit slower than what I normally do. Normally I play these over weeks and weeks and weeks, but some people say, well, you only made net gains of, X amount over that period. How much more can you make? Well, if you just trade a little bit slow in more time frames, you sort of find out quite quickly. So I'll take that off for gains. And what I'm going to do is just hedge short on the former long. And now really I can look for, I think I've got a long there, haven't I? Is it that one? It's one of these. Now I know that one's in plus, but I don't think that's, okay, so $120. Right, got it. And I do have one hiding under here. So I'll take that off. Won't make a massive difference. Because I'm just going to add a light short in there. So if we break this high, which we didn't, I'll just take that for gains. I'll take another light long. You can see my positions are always very, very light. I'm never interested in taking enormous risks because I don't need to. You really don't need to make money trading. Okay, short there, out for gains, short there, out for gains, short there, out for gains. Nice pull back to your river, your 20 MA. I'll take two tiny 0.2s. And I am going to kill that one off for $43 loss. And now I'm only going to add if we get much lower. Okay, and you can see net gains well up, no problem. And we swung all the way down there, all the way up there. Think how many times you would have got stopped out if you were using a stop incorrectly. It would have been a lot of times, I'd imagine. So I can take that one off for gains. I can take that one off for gains. And I think I had another. So I'll take another 0.2. Thank you. Take that as well. Take another 0.2. Okay, so I'm not trading weekly now. I'm just trading in and out and in and out and in and out. And you can see the gains going up, 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 up. And typically the profit trajectory, if you're using a successful hedge method that works, that you practice well, it's going to look like this. You're going to have 91% gains. Of the drawdown is, well, you can see the equity's just gone up and up and up and up and up and up and up. And that's generally what you're looking for. You've got to have a high win rate with this. You've got to understand price action rules. And I would say mostly, you're going to be effective if you can understand drawdown rules. Now, like I said, your drawdown rules are going to be tied to your sizes, which have to be small because you don't really know how far the market is going to go at any time. And you don't know how far your loss streak is going to go. But you also get a high win rate because you're not closing those losses out. I mean, to be honest, I didn't need, one of them was $3, I think. I didn't even need to trade them out or close them out. But I can survive any swing in any market at any month of any year because the size is low, basically. So I can tolerate any kind of drawdown. Now, you add in more assets to the picture, okay? You have a mixture of those assets, and you start to see the profit result go up and up and up. But it's only possible, really, if you're handling a mixed portfolio, so different basket of assets from a range of asset classes with safety and with care. And you can only do that by understanding drawdown size rules. Don't forget, if you want to learn, go underneath, and I'll see you in the next one.